The market does not reward the clever. It rewards the unbreakable. Every chart pattern, every indicator, every perfect plan collapses the moment your mind fractures under pressure. Fragile traders chase relief. They seek certainty in a place built on uncertainty. And when the screen moves against them, their decisions are hijacked by the need to feel safe right now. They widen stops to silence fear, double down to erase discomfort, cut winners to calm the heartbeat. Their edge is not taken by the market. It is surrendered piece by piece to impulse. The unbreakable trader operates on a different contract. Calm under time pressure, neutral in the face of rapid change, anchored to process when price action turns chaotic, this trader treats each decision as one move in a long series rather than a verdict on identity. Feedback is fuel, not a threat. Losses are data, not drama. Wins are statistics, not validation. The difference is not talent or information. It is mental fortitude engineered on purpose. You can build it. You can turn reactivity into response, urgency into patience, hope into probabilities, and ego into execution. In this video, you will get a clear framework for mental resilience that does not depend on motivation or mood. You will learn how to design a pre-market routine that locks in neutrality, how to regulate stress while the trade is live, how to evaluate performance through process and not just profit, and how to train the inner voice that guides your actions when the candles move fast. By the end, you will hold a simple blueprint to upgrade your mindset from fragile to unbreakable, and you will know exactly how to apply it in your next session. Mental fortitude in trading rests on a foundation of thought patterns that survive pressure and adapt to change. And the strongest foundation is built on 3 pillars that work together as one system. The first pillar is cognitive flexibility. The second pillar is emotional control. The third pillar is goal persistence. Think of them as the architecture of a mind that can interpret uncertainty with clarity and act with consistency, even when the screen is chaotic. Cognitive flexibility is the capacity to update beliefs without ego friction. Markets are moving distributions of possibilities and not fixed machines. What mattered yesterday may be irrelevant today, and what failed last month may now be the highest probability path. A flexible mind turns this reality into an advantage. It scans for information that matters and discards noise that only feels important. It interprets new data as a chance to refine a model rather than as a threat to identity. It treats a thesis as a living draft instead of a verdict carved in stone. This pillar starts with probabilistic reasoning. Every setup is a cluster of conditions with a range of outcomes. Flexibility asks what has changed since the last assessment and how that change affects the distribution. It asks whether edge is expanding or contracting and whether the current environment supports continuation or rotation or pause. It is comfortable with the idea that clarity rises and falls across the session and across the week, and it does not demand conviction when the environment offers only mild advantage. Flexibility is not indecision. It is disciplined adaptation. It moves from one state to another with deliberate criteria rather than mood. It avoids the common trap of narrative fixation, where a trader searches for evidence that confirms a position while filtering out anything that contradicts it. Instead, it seeks disconfirming evidence first. If the thesis survives contact with the strongest opposing facts, then the thesis earns capital. If it does not survive, then the thesis is archived without drama. This pillar protects you from both stubborn losses and premature exits. It protects you from overfitting a method to last week's regime and from freezing when a new regime emerges. It also enables calibrated exposure. When conditions align with your tested edge, flexibility grants permission to press size within your rules. When conditions degrade, it grants permission to stand down. The signal is not your feeling. The signal is the alignment of context, structure, and timing that your plan defines. A flexible mind can hold 2 ideas at once: Price can be in a higher time frame trend and still produce mean reversion on the session. Price can break a level and still fail to hold above it. Flexibility uses time frame integration to avoid false certainty. It respects that conflicting signals across frames are common and that alignment across frames is where probability strengthens. To build this pillar conceptually, you normalize model error. You expect to be wrong frequently in small ways while aiming to be right in a net sense across many decisions. You cultivate curiosity in place of fear. You ask, what is the market telling me now and what would change my read? You view volatility as information density rather than danger, and you view quiet conditions as low information rather than safety. In short, you move from prediction to preparation. You do not demand that the market behave. You prepare for how you will behave given the market that shows up. Emotional control is the second pillar. It is not the absence of feeling. It is the ability to act according to plan while feelings move through the body. Trading compresses time and amplifies physiology. Heart rate rises, breathing shortens, muscles tense. Without skill, this physiology hijacks attention and pushes you toward relief-seeking behaviors. You try to make the feeling stop rather than make the right decision. Emotional control restores leadership to plan. It begins with separation of identity from outcome. A losing trade is not a personal failure. A winning trade is not a personal achievement. Both are samples in a series. When identity is tied to outcome, every tick becomes a referendum on worth, and the nervous system fires as if survival is at stake. When identity is tied to process, the nervous system has nothing to defend. You can feel the surge and still operate the rules. Emotional control also depends on clarity about the action channel and the experience channel. The experience channel is what you feel. The action channel is what you do. During intense moments, you let the experience channel play without censorship, and you keep the action channel aligned with the checklist. This split removes the need to fix the feeling before executing the rule. You do not have to feel calm to act with discipline. You just have to follow the pre-commitments you already defined in neutral conditions. Control is supported by precise language. You label the state rather than get lost in it. You say this is fear, or this is excitement, or this is urgency. Labeling turns a global fog into a specific signal, and specific signals are manageable. You also train the pause. A small pause inserts awareness between impulse and action, and that small space is where rules live. The pause does not mean hesitation. It means a single breath and a single question. Does the decision I am about to make match the plan for this condition? If yes, proceed. If no, step back. Over time, this creates a conditioned response where pressure triggers protocol rather than panic. Emotional control is also a function of risk calibration. Risk that is too large for your nervous system will always override logic. Risk that is sized to your current capacity allows logic to guide behavior. That capacity expands gradually as evidence accumulates that you can handle the load. No lecture can replace that evidence. The body believes repetition. Finally, this pillar includes recovery ethics. Stress leaves residue. Without intentional reset, the residue carries into the next decision and contaminates it. Control means you conclude a sequence with closure so the next sequence starts clean. Closure might be a simple step, such as an end-of-sequence review and a physical reset. The methods belong to practice, but the principle belongs to this pillar. Protect the next decision from the last one. Goal persistence is the third pillar. It is the ability to hold a long horizon while executing in the near term. Many traders intend to play a long game, yet let short-term emotion dictate the path. Goal persistence turns the intention into structure. It defines the destination in behavioral terms you can measure. It anchors daily actions to that destination so that every session advances the long arc even when the profit and loss does not cooperate. This pillar begins with a clear distinction between outcome goals and process goals. Outcome goals are what you want. Process goals are what you will do. Outcome goals are subject to variance. Process goals are within control. When goal persistence is strong, you respect outcomes as feedback while you grade your success by adherence to process. This keeps motivation stable through the natural streaks and lulls of performance. Goal persistence also includes tolerance for boredom and patience with plateaus. Professional progress is often quiet. There are long stretches where skill is compounding below the surface and results look flat. The fragile mind seeks novelty and jump systems. The persistent mind continues to execute the same high-quality repetitions while refining the edges that matter. It resists the urge to optimize what is already good and instead protects consistency. Another component is selective focus. Attention is finite. If it is scattered across too many objectives, none of them compound. Goal persistence narrows the field. It chooses a few keystone behaviors that move the entire system, and it defends them against distraction. In trading, those keystones often include preparation quality, execution discipline, risk containment, and post-session review. The exact forms are specific to your method, but the principle is universal. Protect the inputs that create the outputs. This pillar also addresses relationship to time. You are not trying to win today. You are trying to be net positive across months and years. That orientation changes decisions. It values durability over thrill. It values small, reliable gains over heroic bets. It values staying in the game above all else. When a decision threatens your ability to play the next session, it is off plan. When a decision preserves your capacity for the next session, it is on plan. Goal persistence finally requires self-trust built from evidence. You make promises you can keep, and you keep them. Each kept promise is a brick in a foundation that can carry heavy weight. Each broken promise erodes that foundation. Start with commitments that are small and concrete. Keep them until they are automatic, then raise the load. This is not motivational talk. It is mechanical. Your future discipline depends on the record you create with yourself. When these three pillars combined, they form a unified system. Cognitive flexibility sets the quality of your read on the market and your willingness to update that read. Emotional control sets the quality of your execution under pressure. Goal persistence sets the continuity of your improvement over time. Together, they produce a trader who can sense change quickly, act without internal conflict, and persist long enough for edge to realize its value. The fragile version of you collapses when conditions shift, when feelings spike, or when results stall. The unbreakable version keeps operating. The fragile version needs the world to cooperate in order to perform. The unbreakable version performs regardless of the world because it has engineered the internal conditions that support performance. This system is not theory. It shows up in the way you interpret one candle, and the way you respond to one loss, and the way you structure 1 week after a drawdown. Build the pillars and you will notice a new relationship to uncertainty. You will notice more patience during acceleration and more clarity during chop. You will notice that setbacks lose their power to derail you because each one fits within a larger plan. Most importantly, you will notice that your decisions start to look the same from session to session. That sameness is the signature of professionalism. It is the quiet rhythm of a mind that has chosen fortitude as its edge. Build mental fortitude through a practical framework that turns intention into daily behavior and transforms pressure into a predictable environment. Begin by designing a pre-market routine that installs neutrality before you open the platform. Wake up with enough buffer to avoid rushing and give the mind time to stabilize. Hydrate, move the body lightly, and take 3 cycles of a physiological reset where you inhale twice through the nose in 2 short sips and then exhale slowly through the mouth. This simple sequence lowers baseline arousal and teaches the nervous system that you are in control of the dial. Sit for a short period of quiet observation with eyes softly focused and breathe in a steady cadence. During this time, define the identity for the session in one sentence, such as, "I am a process-driven trader who acts only when the plan says so." Write your risk limits clearly in present tense and place them where you can see them. Daily loss limit, maximum consecutive losses allowed before a pause, maximum position size relative to account, maximum trades for the day, and mandatory stop distance rules should be explicit and fixed before any chart is opened. Define clear do not trade conditions such as fatigue, illness, emotional spikes from life events, or any cognitive fog that makes you slower than usual. When a do not trade condition is present, you will stand down without debate. Prepare your environment deliberately. Clear the desk, close unrelated apps, silence notifications, and set the lighting and posture for sustained attention. Open the economic calendar and scan for events that shift volatility. Label the day mentally as Quiet Balance Day, Expansion Day, or Unknown Day, and adjust your plan accordingly. Build a pre-market market map. Identify key levels, zones of liquidity, expected areas of reaction, and the higher time frame context. Write a simple narrative for potential paths while holding the words lightly. Use if-then statements to translate the map into action. If price tests the prior high and rejects on declining momentum, then I will wait for a lower high and consider a short within my rule set. If price consolidates near the open with rising participation, then I will prepare for a breakout and trade only if volume confirms. These statements convert analysis into executable rules. Build a small checklist you can complete in less than 2 minutes. It can include platform checks, order entry test, hotkeys test, and stop orders confirmation. Finish the routine with a 1-minute visualization in which you see yourself following the plan during both a winning sequence and a losing sequence. The goal is not to predict outcome, but to rehearse behavior. You stand up, take one slow breath, and begin the session with the posture of a pilot who has completed pre-flight. During the session, your focus is to regulate arousal, protect decision quality, and execute your edge without internal conflict. Adopt the action channel and experience channel split. The experience channel is free to register sensations and emotions in real time. The action channel remains bound to the checklist and rules. You do not suppress feelings, you observe them and you act according to plan anyway. Install a one-breath rule before any click. The breath is one slow inhale through the nose and one slow exhale through the mouth while mentally naming the decision you are about to make. This micropause inserts awareness between stimulus and response and reduces impulsive entries and exits. Use precise labels for your state. Say quietly, "This is urgency," or "This is fear," or "This is boredom." Labeling shrinks the emotion from a fog into a signal. When arousal spikes, use a rapid reset protocol. Push the chair back, plant both feet, look at the farthest point in the room to widen visual field, then take 3 quick physiological cycles. This acts as a circuit breaker and prevents the next action from being a relief-seeking behavior. Manage focus intentionally. Use a timer to structure work blocks that match your natural attention span. Many traders operate well in blocks of 20 to 40 minutes. During a block, you are in high focus. During the short gap, you are in deliberate defocus. In the gap you stand, stretch, breathe, maybe step outside for 1 minute of natural light. Return to the screen only when your heart rate has settled. Create a rule for information flow. Keep the number of charts minimal. Hide the profit and loss column during the session if it distracts you, and reduce news exposure to scheduled items unless your strategy is news-driven. If you feel the pull to check social feeds or open unrelated tabs, label it as escape impulse and return to the chart. Protect the quality of your perception by narrowing the sensory input to what the plan requires. Structure entries and exits with if-then statements that are already written. Do not invent new rules mid-trade. If you sense that you are inventing, flatten the position and reset. Use dynamic position sizing within your plan to keep physiology within capacity. If your last sequence involved a stressful loss, reduce size on the next valid setup to restore trust in execution. If the day begins with 2 clean, process-aligned wins, resist the urge to expand size immediately. Keep size constant during the first hour and reassess only after a scheduled review break. Protect the session with stop trading triggers. If you reach the daily loss limit, stop. If you commit 2 rule breaks, stop. If you notice reaction time slowing or mind wandering repeatedly, stop. Closing the platform is not failure. It is capital preservation and attention preservation for the next opportunity. Use a running log during the session with very short lines: time, context, intention, action, result. Write only what you need and keep it factual. If you are in a trade, note why you entered in a single sentence and what conditions would invalidate the trade. This keeps you aligned with the thesis and prevents narrative drift. When you exit, note whether the exit matched plan or was driven by feeling. This log becomes gold during review. Create a menu of stress management tools you can deploy quickly without leaving the desk. The first tool is breath regulation.
The second tool is visual field control. The third tool is posture and muscle release. The fourth tool is language reframing. For breath regulation, use quiet nasal breathing at a slow pace and insert the physiological cycle only when arousal spikes. For visual field, alternate between narrow focus on the chart and wide focus on the room to avoid tunnel vision. For posture, relax the jaw, drop the shoulders, and place both feet on the ground to safety to the nervous system. For language, replace catastrophic inner talk with neutral descriptions. Instead of, "I am going to miss it," say, "I notice the urge to chase and I will wait for confirmation." Instead of, "I cannot lose again," say, "I will execute the next valid setup with my smallest size." These small lines keep the mind inside the plan and away from fear or greed scripts. Add a micro routine for volatility surges. When the market accelerates and you feel pulled to click without a plan, step back, widen the chart to see higher context, reread your if-then entry criteria, and only act if the criteria are present. If the criteria are not present, set a simple alert and walk away from the desk for 60 seconds to break the impulse loop. Non-trading performance evaluation is where you convert experience into durable skill. After the session ends, do not jump directly into life. Complete a structured review while the memory trace is fresh. Start with a 2-minute state dump by writing exactly what you feel about the session without judgment. Then shift to process grading. Create 3 or 4 core process metrics such as quality of preparation, adherence to entry criteria, adherence to exit criteria, and adherence to risk rules. Grade each metric with a simple pass or fail, or with a score from 0 to 100 if you want more resolution. Write 1 sentence of evidence for each grade. Keep it behavioral and avoid storytelling. Next, analyze key moments. Choose 1 winning sequence and 1 losing sequence that taught you something. For each, list a context, your intention, the action you took, the rule it mapped to, and the result. Identify a single improvement target that would have made the biggest difference and translate it into a specific behavior for tomorrow. For example, if you noticed late exits due to hope, set a rule to place a stop at the invalidation point immediately at entry and do not move it unless the plan says to trail. If you noticed premature exits due to fear, design a hold-in-thirds plan before the session with predetermined partial exits and no full exit until the plan says so. Log learnings in a living playbook. The playbook is a collection of patterns, scenarios, and responses. Update it with new market behaviors and with your best responses to them. This creates a feedback loop where your method evolves without chaos. Once the review is finished, complete a physical reset. Walk, stretch, do a brief breath cycle, and leave the trading station. This closure prevents emotional residue from contaminating the next session or your personal life. The final piece of the framework is deliberate training of self-talk and growth mindset. Your inner voice is the runtime coach of your execution. Train it as you would train any skill. Begin by capturing common automatic thoughts that appear under stress. Write them down as they show up. Translate each automatic thought into a neutral and directive line.
If the thought is, I am missing it again, the trained line becomes, I notice fear of missing out, and I will wait for price to return to my entry zone. If the thought is, I have to make back the loss, the trained line becomes, I will let the next trade come to me, and I will execute size appropriate to my plan. Pair each trained line with a breath and a posture reset so that the line is anchored in the body. Practice these lines outside of market hours so that they are available during pressure without effort. Build a short pre-session script you recite out loud.
The pre-market routine sets your baseline. The in-session protocols keep execution stable. The review converts experience into improvement. The self-talk training keeps your inner dialogue aligned with the plan. Add 2 further practices to accelerate the build. The first is scenario rehearsal. Choose common market situations such as trend day, range day, false breakout, and liquidation cascade. For each, write your best response in simple if-then statements and rehearse them mentally like a pilot rehearses emergency procedures. The second is stress inoculation. During non-trading hours, expose yourself to controlled discomfort that resembles trading load. For example, set a timer for a challenging breath hold or a sustained wall sit while you recite your rules calmly. The point is not to push limits of fitness, but to teach the mind-body system that you can remain deliberate under strain. When the market later induces strain, the body recognizes the pattern and stays within your control. Tie everything together with weekly and monthly cycles so that the system continues to evolve. At the end of the week, review your process metrics across days and look for drift. If adherence dropped on Wednesday and Thursday, investigate the cause and adjust. If preparation quality improved your entries, double down on the elements that created the improvement. Archive any tactic that repeatedly produces noise. At the end of the month, read the entire playbook, prune outdated sections, and set one theme for the next month, such as patience in consolidation or conviction when conditions align. Keep all goals anchored in behavior and not in money. Money will follow stable behavior over time. Protect the essentials. Sleep is non-negotiable. Nutrition and hydration matter. Movement matters. Social recovery matters. You are an organism, not a machine, and the organism performs better when cared for. Bring that care into your routine, and your capacity for pressure will expand without drama. This practical framework is not glamorous, but it is powerful. It turns mental fortitude from a vague concept into a clear sequence of actions you can repeat. If you execute this sequence long enough, it will become automatic. When it becomes automatic, you will find that pressure no longer dictates your behavior. The candles move and you remain the same. That sameness is not rigidity. It is disciplined flexibility, calm execution, and persistent commitment to the long game. It is what makes a trader unbreakable. This 30-day plan turns mental fortitude into a daily practice that builds from a stable base to confident execution, and it is designed to be simple to follow and strict enough to create real change. Begin by anchoring a consistent wake time and sleep time so the nervous system gets predictable recovery. Each morning arrives with the same pre-session sequence you established earlier, and you will treat it as non-negotiable. Drink water, move lightly, run a short breathing cycle to lower arousal, review risk limits written in present tense, and read your single-sentence identity line. Then open the calendar for scheduled events, sketch a brief market map, translate it into if-then actions, check platform function, and complete a 1-minute rehearsal of discipline under both a win and the loss. The first 7 days are about stability and measurement more than performance. Your objective is to install the routine, protect adherence, and create a baseline record. Grade 4 process metrics after each session: preparation quality, entry rule adherence, exit rule adherence, and risk rule adherence. Use a simple score so you can see patterns at a glance. Keep a very short live log during the session that captures time, intention, action, and result in one-line entries.
After the close, write a 2-minute state report, select one winning sequence and one losing sequence for learning, and translate a single improvement target into a specific behavior for tomorrow. End with a brief breath reset and a deliberate step away from the station to clear residue. Motivation in this phase comes from streaks of completion, so track days where you completed all 3 anchors of the plan, which are pre-session routine, live execution according to rules, and post-session review. If you miss a part, mark it without judgment and restart the streak the next day. The only goal is consistency of behavior. During the second 7 days, you add controlled exposure to pressure while keeping the same anchors. At the start of each session, write one clear constraint for the day that intentionally limits complexity so your mind can execute with calm. A constraint could be a cap on number of trades, a rule to trade only the first hour, or a rule to take only setups that align across time frames. The constraint removes ambiguity and reduces the chance of improvisation under stress. Add a micro practice called the one-breath confirmation. Before every click, you take one slow inhale and one slow exhale while naming the rule you are acting on. This practice is a bridge between intention and action, and it prevents impulse from masquerading as decisiveness.
Introduce a small position size reduction on the first valid setup after any loss to help the body trust the plan after pain. Keep the do not trade conditions visible and respect them without debate. At the end of each day, expand the review by writing one paragraph that starts with "What I learned today" and ends with one promise for tomorrow. On the 7th and 14th day, complete a longer check-in where you read the past week of logs and grade trends in the 4 process scores. If preparation is high but entry adherence is low, adjust tomorrow by making entries more mechanical with a checklist that requires a final box to be checked before action. If the risk rule was broken, reduce maximum size for 3 days and restore only after a clean record. The third segment, covering days 15 through 21, moves into skill deepening. Keep the anchors and the constraints and add 2 new practices. The first is scenario rehearsal. Choose common market situations such as expansion trend, balance range, false breakout, and liquidation wash, and for each, write a short if-then sequence that defines your best response. Spend 5 minutes before the session running through one scenario with eyes open while breathing slowly. The goal is not prediction, but preparing your nervous system to recognize and execute under familiar pressure. The second practice is controlled stress training outside market hours. Pick a safe discomfort, such as a wall sit or a plank or a breath hold, and combine it with calm recitation of your rules for 1 to 2 minutes. This is not fitness work. It is a message to your body that you can carry rules through strain. In session, continue the one-breath confirmation and the rapid reset protocol when arousal spikes. Restrict new inputs. Hide profit and loss during the session if it pulls you into outcome focus. If social feeds distract you, move the phone out of reach. If you find yourself scanning too many symbols, prune the list to a small basket and accept the fear of missing out as a normal signal that does not require reaction. At the end of each day, upgrade the playbook with one refined pattern and one refined mistake. A refined pattern is a clear description of a setup that worked with the conditions that make it high quality. A refined mistake is a description of a behavior that cost you money or attention with the specific trigger that led to it and the counter protocol you will use next time. At the weekly check on day 21, look for the single lever that would most improve decision quality for the next 7 days and commit to it. The final 9 days are consolidation and autonomy. At this point, the routine should feel familiar and the body should trust that you will follow rules. Ease off any obsession with results and let the process carry you. Begin each session by writing a one-line intention that names the quality you are strengthening, such as patience in consolidation or conviction when alignment is present. During the day, practice deliberate no trades when conditions are mediocre to build the muscle of restraint. This is not avoidance. It is proof that you can choose inaction when edge is thin.
When conditions align, give yourself permission to execute with full plan size and to hold according to plan, even if feelings attempt to pull you out early. Continue to use the pause, the label for your state, and the reset when needed. If you encounter a drawdown during this period, apply the recovery ethics immediately. Halt trading for the day if you hit the loss limit or commit to rule breaks. Reduce size for the next 2 valid setups on the following day, even if you feel eager to recover. Write a short reflection that begins with what preserved my professionalism today and ends with what I will protect tomorrow. At the end of the 30th day, perform a full review. Read the playbook entries, the daily logs, and the weekly check-ins. Calculate adherence rates for the 4 process metrics and write a short narrative that explains what changed in your behavior, what remains fragile, and what your next month theme will be. If adherence is above a level you find acceptable and your nervous system felt manageable, consider lifting one constraint slightly, for example, allowing one additional trade or extending focus time by a small increment. If adherence is inconsistent, keep constraints tight and simplify further by reducing market variables, trading fewer symbols, or shortening your active window to the period where your attention is strongest. Throughout all 30 days, sustain motivation by shifting focus away from feelings and toward evidence. Evidence is found in completed routines, in scores that trend upward, in fewer rule breaks, in calmer physiology during volatility, and in a playbook that grows with useful entries. Mark small wins daily even when profit is flat, such as executing the first valid setup without hesitation, respecting a stop without debate, or choosing to stand down during chop. Speak to yourself as a coach and avoid both harshness and empty praise. Use clear behavior baselines such as, today I matched my entry criteria on 3 decisions, or today I noticed urgency and inserted the pause. If a day fails, close it with a clean reset and return tomorrow without narrative. This plan is a living structure. It does not ask you to be perfect. It asks you to be consistent and to adjust with care. When you treat each day as a practice of the same few essentials, mental fortitude compounds without drama. By the end of the month, you will have built a mind that arrives prepared, acts with calm, learns with speed, and continues the work without relying on motivation. That is the path to becoming unbreakable. You now have a complete blueprint to become an unbreakable trader. We defined what it means to be steady when the screen moves fast. We built a mind that updates models without ego, executes rules while emotions pass through, and stays loyal to a long horizon while working one decision at a time. You learned how to arrive neutral on purpose, how to manage arousal while the trade is live, how to grade yourself by process instead of outcome, and how to train an inner voice that gives clear direction under pressure. You practice scenario rehearsal so stress feels familiar. You use simple if-then lines to convert analysis into action. You ran a 30-day plan that turned scattered intention into repeatable behavior. None of this depends on motivation. It depends on structure, repetition, and honest review. The benefits accumulate in quiet ways first. Your baseline becomes calmer. You feel the urge to chase and you choose the pause. You feel the sting of a stop and you preserve the next decision. You notice that your best days no longer feel lucky, and your worst days no longer feel fatal. You see fewer rule breaks. You see cleaner entries and exits. You see a playbook that grows with patterns you can actually execute. Confidence begins to mean trust in process rather than hope in outcome. That is real confidence, and it travels with you across different market regimes. The identity shift is the real win. You stop asking for certainty from the market and start providing certainty from your behavior. You move from prediction to preparation and from reaction to response. You carry a small set of promises into each session and you keep them. Each kept promise is a brick. Over time, the structure can carry real size without shaking you apart. This is what mental fortitude looks like in practice. It is not loud, it is consistent. If this work helped you, support the work so it can help others. Like the video to push it to more traders who need a clear path. Share it with a friend who is stuck in the loop of hope and frustration. Subscribe to the Flow State Trading channel so you never miss the next training. Turn on notifications so each new session lands in your routine. Add your voice below and tell me the single biggest psychological challenge you face right now. Naming the challenge is the first lever. I read the comments and I turn real challenges into concrete protocols so your question can become the next tool in the playbook. Next, we will go deep on psychological risk management. We will define risk capacity and risk appetite so position size matches your nervous system. We will build a risk budget that survives volatility and a daily loss limit that protects attention for tomorrow. We will install stop promises you do not break and a clean protocol for trail management that replaces hope with structure. We will design recovery ethics that pull you out of drawdown without desperation, and we will map dynamic risk rules that flex with market regime and with your current state. We will show how to think in series so a single loss never becomes a spiral. That session will give you the tools to keep your edge intact while the numbers change. If you want more support before that video lands, rewatch the sections that hit your weak points and run the 30-day plan again with one new constraint and one new theme. Keep the scoreboard on process. Keep the body cared for with sleep, movement, food, and light. Keep your desk clean and your rules visible. Most of all, keep your promises small and keep them every day. The market rewards the trader who can remain the same person when conditions change. You can be that trader. Begin with the next session. Bring your routine, bring your rules, bring the calm you practiced. Execute one clean decision after another and let time do the compounding. I will see you in the next training on psychological risk management. Until then, be steady and keep building.